All right, here we go. Please subscribe to the channel. Please.
Hey guys, YouTube's got an algorithm and it'd really help us out a lot if you could like, comment, and subscribe. This is how we can get more information out to more people and share the message of Toronto real estate.
In
Thanks.
that order, like, comment, subscribe, and hit the damn bell.
Recording. That's it. I'm out of here.
This is an
I do
invasion
not approve.
of my privacy. What
I
is
do not
this?
approve.
Can you hear me?
But really, we can just record through OBS and no one will even know. No one will even know.
You know who will
We'll never
know? I
Oh, no,
will
no.
know. I will know.
Mhm.
Because this is way easier. Like ridiculously easier.
Yeah. What was Captain Crunch talking about with our mics?
He says our audio sounds worse. And you know what I told him?
What?
Nobody's listening. No, I told him who gives a shit.
Yeah.
It's about what we're saying, not the depth and richness of our voices while saying it.
I mean, are we a year? Have we been doing this a year?
Maybe, yeah. Maybe it's a year now.
It's a year now.
Happy
Maybe today's the
anniversary.
1 year. So let's just call it then 2 years. We're gonna have it figured out. 2 years. It'll be like crisp, clean, just like all the other podcasts that I watch and listen to. I've been doing a lot of podcasts lately, though. Like I really like podcasts.
Like you've been doing
No,
listening
to them. Yeah.
been invited on any?
Zero.
No, me too.
Edutainment.
Yes.
Yeah.
That's all I do is watch technically what our podcasts, I think.
Yeah.
Or educationally edited videos that cater to my interests, which are many.
and conform to my ideas and opinions.
Well, that's the problem.
YouTube's good at that.
They're really good. I mean, if I
Like, oh,
scroll
okay, you like
down
that,
long
eh?
enough, yeah, if I scroll down long enough, they'll get me with something.
Yeah. They like
But
it.
there were points during the pandemic over the last year where I did feel like I ran out of YouTube videos to watch.
Oh,
Yeah. So
you
it's
had
a
to open
dark
up another
place.
door. You just had to open up a couple more doors.
No, I took a nap, and then when I woke up, there was like a million notifications from sites that I follow, and all of a sudden there was more.
Yeah. Like I got sucked in, right?
Minutes.
Because I really wanted to figure out who built the pyramids, right? So as I was watching YouTube video after YouTube video, they
That's
kept
a dark
promising me
path.
that they were going to tell me. Like they kept promising new information, like there was like some newfound secret that was just like unveiled.
Yeah. Well, and then
Yeah.
you noticed that the video was posted in 2011,
And there was just no answers at the end of any of these hour-long videos.
and
But I
nobody.
sure as heck learned a lot about the pyramids.
Yeah, but not what you wanted to learn.
Not what I wanted to learn. No.
How did they get all of that stone there?
It was a river. They diverted the
River.
Nile. Yeah, they diverted the Nile. Oh, they have proofs. They have ships. They have ships buried next to the pyramids in these graves
Really?
that are the ships that carried the stone.
You say that with such confidence that I almost believe you.
It's what YouTube said.
Really? Like,
You know, it's
like confirmed by multiple sources? Did you
no. I
double-check
mean, I
this?
watched the videos. That's all. I have no
Quotes.
idea if those graves with the ships in them even exist. That's just what they
Right.
say. Yeah.
This is scary.
Yeah.
This is what's wrong with the world right now.
Yeah. And then there's like
You-
some stone cutting processes where they were able to use like a chemical reaction. So when the stone would sit on top of each other, they would have like a chemical reaction that would actually make the stone eventually come to be fitted a certain way. So it would be an exact fit. So it'd be a rough cut, but it'd be like an exact fit afterwards.
You couldn't build those today. So hold on a sec. So boats with all that stone.
Yeah.
Okay.
Yeah.
And then, I mean, it's not right beside the water. So how'd they get it from the boats to the site?
They diverted the Nile to the site.
Diverted right to the site. Like,
Right to the site.
really? Is
Yeah.
there evidence of this? Is there
The
some
boats. There's boats
boats?
buried at the foot of one of the big Great Pyramids.
Right. This is something I have not heard of.
Yeah. I mean, if you want any more information about pyramids, I mean, you could go on YouTube and, you could watch some videos. You can maybe read a book in the library or go to Egypt, or you can just ask me, whatever one you think is more convenient.
I've been down that rabbit hole before, and I do
Yeah.
remember that I don't remember anything about boats.
Yeah. This must have been one of those just discovered.
Maybe somebody planted a boat for a story.
That's it. Maybe there is no boat.
Maybe there's no boat, or
Yeah.
maybe
And it's just it's just a cover up from Egyptologists, whatever that word is. Those
no.
guys.
I think it's tied to Area 51 and aliens. And I think it's like, oh,
Well-
geez, they're getting really close. We better throw them off by diverting the Nile and spreading it through TK. Because that guy will believe anything.
That guy will believe anything. He'll spread the word like wildfires.
Yeah, I wonder if I'm missing the fact that no, he's not. Oh, because it's 2 minutes early. I think. Do you ever have like my computer clock and my phone clock are not
Mine are in sync.
mine are not.
He's 2 minutes late. But
2 minutes late.
Conor McGregor last night.
Who?
Conor McGregor.
Okay.
UFC.
Okay.
Didn't go so well for him.
No?
No.
He's a big shot, right? He's like the
He's like not even that good. He just is paid the
Not
most
even that
because
good.
he's not that good. But he does talk a good game, and that's what
Does he win?
That's what it takes. He did win at one point. He had some lucky punches and he beat some people, and that's
Ooh.
what got him to where he is. And because he's got so many millions of dollars, eventually things start to change. Long story short, last night his shin bone snapped in half.
Oh.
Yeah.
Oh, there he is.
I
Should
think
we let him
that's
in or should we punish him because he's late?
no. I think we should let him in. What are you talking
Yeah,
about? Let's go.
probably a good idea. Too tired to punish anybody. Anyways,
You've been punishing all those interns lately. It's like they're getting
they're
good.
gone. They're
Yeah.
gone.
We're skeleton crew here.
It's much better this way. I find.
Just
Although, do I have to ask him to unmute?
Old reliable staff here.
Ask to unmute. Ooh, ask to unmute. There he is. There he is. I think I
Someone's
screwed it up.
trying to unmute and you're
And I'm asking you to
for me
unmute.
here.
Sorry. I didn't know if
Daryl's
you needed
impatient.
my
He's just-
assistance.
Can't just wait 2 seconds.
This is great. Look at this. Jeremiah from Colliers is back again for round 2. Why would you do that to yourself?
It's so entertaining. Last time I couldn't resist.
You couldn't resist? Was it a blast?
It was a blast.
It was a
There's
big party.
there's some
we had
sort of
last time.
incentive here, right?
Yeah,
Daryl, the big prize winner. We'll see.
that's right.
Welcome back, though, Jeremiah. Thanks for doing this again.
Thank you for having me.
Yeah, there's probably some listeners because we've got obviously this huge fan base. I mean, we're just growing exponentially, just massive growth, it's off the charts. And I'm sure some of them didn't listen to the last episode, so we could get a little intro from you if you don't mind, just to say who you are and what you do, and that'd be great.
Yes, well, thank you for having me again, both of you. It's always a pleasure. I work at Colliers. I lead a team there where we sell exclusively for owners, development land, retail buildings, office buildings, and other buildings around the Greater Toronto area. We also work in downtown Hamilton, and specifically we specialize in the mid-market, so call it $2 to $75 million in value. And specifically, we look to add value and maximize the value for the owners of real estate that we work for and represent. So that's essentially what I do.
Awesome. We do a lot of residential talk here, Darryl and I, right? Like we're always kind of heading down the housing market, and
Try and squeeze in development stuff, but nobody ever wants to listen to that.
well, but it always relates to the developments, like a residential development, right? Like it's gonna be condos and purpose-built rentals. Like we focus a lot on that. So you're a commercial guy. We want to hear what's going on. What's the word on the commercial streets right now?
Well, if you want to talk about development land, I would call a bright spot, because in the first quarter of this year, and the second quarter is turning out to be the same, but we were up 72% year over year in volume. And that was 1.8 billion in land sales closed in the Greater Toronto area. You can add about another 40 million in Hamilton, but it's surprising because if you look at that, you start to think, well, wait a second, 72% up year over year. We were in the pandemic. Well, technically the pandemic didn't start until, call it March 18th, the very end of first quarter last year. So when you think about that sort of data in respect to where it's been in the past years, you start to think that, wait a second, maybe this is very good for the market. The market is very strong in the land basis, and we believe there's probably going to be continued growth in that field. But it's important to note too that there was probably some catch up where deals had got pushed off, and we were experiencing that in our own practice. And also it's important to note that there's something called inclusionary zoning that is impending in the city of Toronto. At first, we thought it was actually going to come in place January 1st, 2022. It looks like now it's going to be pushed off to probably September 2022. But this inclusionary zoning is laying out areas in the city of Toronto specifically, because Toronto's taken it a lot more seriously. There is a provincial mandate for this as well. But, for all the listeners out there, it's in basic terms, it's incentivizing, or rather requiring, every new developer to have a certain amount of affordable housing in their new developments. And in those new developments, that can be, anywhere in the range of 5 to 30%, depending on the proximity to what we call MTSAs, major transit areas. And they really haven't laid out exactly the specs yet. It's still kind of being worked out, especially in the city of Toronto. But it's going to change the market drastically. And we've just closed on a few large development pieces, and the developers were telling us, we're looking to build up our pipeline before this inclusionary hits, because it massively changes the economics of a deal. And Darryl knows this better than anyone. But when you're looking at, call it a gross development margin on cost of 15 to 20%, call it, if you take of your revenue coming into the building, so you're selling, say, $1 in a building, and of that $1, you're taking 5 to 30 cents and basically taking that revenue away and accounting for affordable housing, your pro forma and the economics of the deal are drastically going to change when you have a 20% margin you're trying to hit, right? So this is why the market has in a big way changed for people to push development land to get it done quicker and sooner before this inclusionary zoning happens, because
Well, the city has nobody in the planning department.
Yeah, exactly. And they're extremely overworked, and they're extremely busy, and understaffed, and of course public job too. But it's really kind of changing the development land market, and it's changing the way that we think land is being sold, because there's this like catch up that's happening right now.
Is this downtown though? Like, is this mostly downtown, or is this like you're seeing this throughout the entire city of Toronto? It's inclusionary zoning.
Entire city of Toronto. It's so
city or GTA, like Toronto.
Well, it's in Ontario. It's a provincial mandate, right? So it will be there, but municipally, the city of Toronto has taken a bit of a different approach. Obviously, being the biggest metropolis in Canada, and a very, opinionated and specific planning kind of regime. So they've taken on the thought that, well, we want to get in front of this. We want to move quickly on this. So the city of Toronto is looking to move and change the way that they lay out the mapping of these MTSAs and the way of how inclusionary zoning will be brought in, essentially. But really what we're telling our clients, and Darryl knows this, is that this, coupled with what's something called Toronto Green Standards version 4, which is also adding about roughly 10% extra onto the hard cost, we believe is going to drastically change the economics of the land market moving forward, vis-a-vis how these pro formas are done. So if if this changes as much as we think it is, the land market could probably pretty much neutralize after that inclusionary isn't put in place, and only zoned land, which is good news for Darryl, is going to be as attractive to deal with the economics. And the only reason about this, and I say this, is because when you look at the pro forma of a development land site, there's a number of movable costs that kind of change within the market. And one of the movable costs is the land price, right? It's dependent on who owns the land, the owner of the land, what they're willing to sell it for. Now, obviously, generally, there's a market value for land, and this is what we do all day long, is value land and represent landowners when we're selling land. But when you look at the hard costs, the construction costs, the consulting costs, the taxes that the municipality does, the taxes the province does, the federal taxes, the consultants that are on file, these are all costs that are really not going to change drastically, right? The residential brokers, when they sell all the condos to the users, all these sorts of costs don't really change. The only real movable change is what you can sell a condo for and what in the land is. And let's look at what you can sell a condo for. That's really market driven as well, right? If the developer decides, I want to sell these for $1,400 a foot, and the market decides, yes, we're okay with that number, and they're able to sell it, then, again, that's kind of setting the market. So it doesn't really change. So really brings us back to the land value. And the land value is really only the one that's going to change. And even Barry Lyons, a real estate consultant, and Barry Lyons did a big study for the city, and they laid out the exact same thing. They said, well, we believe that the only thing that can change is the land value. So if you think about it, for example, Mr. Butler, your car is worth $10,000 today, and next year it's going to be worth $8,000, and you're still using that car and it has function to you, and you don't really need to sell it. Are you going to all of a sudden turn around when you're about to sell it for $10,000 and sell it for $8,000? Probably not, right? You're going to say, well, I'll just wait till it's worth $10,000 again. I'm still using it. It's not really costing me that much. And this is the exact same story that's happening with many landowners in the city. And you can create a very good analogy to, or rather a similar story to the industrial land market in 2009 to about 2015, 2016. This market pretty much sat because rates did not move. And there was this big push down on the economics of the deal, so that all the landowners decided, well, we're not going to sell because we believe our land is still worth what we thought it was worth in 2007 when the industrial land market was really good. So that market took 5 to really 7 years to stabilize, for those values to come back up, the liquidity, the velocity in the market to move. And this is basically what we're forecasting. Obviously, we don't know the future, but what we believe will happen in the future when inclusionary zoning comes in. So it would be very difficult for land to sell because owners will have, had more valuable land the day before, call it. So they'll sit and they'll wait. And this may change the way
Or the developers will pay because they need inventory because it's already so far behind.
Well, this quarter, you said the first quarter was up 72%. What about the prices of land? So the sales were up, so that's good. But
What were
about
yeah.
the end of the day sale prices?
So the land values, difficult to actually kind of put a moment in time value on unzoned land because it's all basis on what you can build. It's not like New York where here's my air rights, I can build 100,000 feet. I base it on that. And Darryl again knows this better than most. It's a bit of a guessing game. You know that, okay, based on my planner's assumption, here's the likely building is 300,000 feet. But you go in for plan, maybe you end up at 250,000 feet, right? I'm exaggerating a bit here, but the point of that is that it's difficult to say where the land value is, but from what we've been tracking, we believe the land market is up about 8.7% this year so far from last year in 2019.
Okay.
So yes, this is doing well.
Good. Yeah. Usually those two things will go hand in hand. Volume goes up and it puts pressure on prices. So that makes sense.
And just to follow up too, the second quarter of this year for development land has been very good as well.
But what's selling? Like what kind of deals are you seeing? What's a good deal that you've seen recently?
Well, we just sold 2 phases of development land up on the, call it Toronto East Side, about 500,000 square feet of buildable density. We did another sale in Mississauga that was almost 1 million square feet of density. Another one in Markham, there's 1 million square feet of density. So talking fairly large land sites.
Big projects.
Are those residential or what is it?
This is all residential, yeah. So we've had a
Wow.
very busy first and second quarter, and again, we have listed almost $200 million of development land in the last quarter. Again, moving forward. So
What's a million square feet in Mississauga go for per square foot?
About 65.
Zoned?
Yeah, unzoned. But Mississauga zoning is a little bit different. It's not like Toronto. You essentially know the built form you're going to get, roughly the height. It's really you're kind of working with the city over what your site plan is, how the layout is. So it's not like the city of Toronto where, you come in and, like, for example, the Four Seasons in Yorkville, when they went to rezone that site, people thought it was a mid-rise area. They came in, Lifetime, Menkes, and they came in and decided, well, it was actually part of the landowners before, a German group, and they decided, we think this is a 40 and 44 story building. And so they went through this rezoning process that at that point in time, the city was still kind of more pliable on where they thought the direction of density went. And so there was a little more pliability. And this is actually, you've noticed this in the market too. So for example, in 2016, I sold the corner of Church and Wellesley, fairly high profile corner, a block from the subway. We had 17 offers on the site, massive range in value of like $20 million on the bids, ended up selling to essentially a pension fund. And they went through an approval process that was very difficult. And they thought there was some more pliability on it. And they just ended up losing at the LPAT this year. It took them that long. And so now the city's been much more difficult to get some, call it, new areas of development, but it still is happening where you can go in and say, I think this is a high-rise site, whereas the city has directed it as avenues. It just doesn't happen very often. Scarborough Junction is a very good example. Everyone thought that area was maybe a mid-rise site, and then Republic Developments came in and had this vision of, we believe this is a high-rise area. It's on transit. It's its own city, and on its own, really kind of own neighborhood. So, now they've gone in for 5.5 million square feet of density. It's basically a new city place. So there are examples of this, but, going back to your original question, it means that land is harder to buy now because the market is very efficient now. It's been priced to perfection is kind of the right way to say it. And it means that when you go in to buy land, you better well know and understand your planning very exactly and buy that land based on what that planning dictates, and then maybe try for something in the future. And there's ways to protect the landowner there so they don't get, bogged down, but there's a massive amount of risk that these developers take, and landowners sometimes don't understand that, nor do they have to. It's their prerogative, their land. But it's the planning in the city of Toronto has kind of taken a fine-tuned change, and the city is not willing to adapt to what they were willing to do in areas that were being built out, say 5-10 years ago.
Do you think we're going to see something similar to what we saw when they were abolishing the OMB and bringing in LPAT, and nobody knew what the heck was, what LPAT was going to be and how it was going to work and how long it was going to take. And, we had all these experts with their opinions and like long seminars you had to stomach, and like nobody really knew what. Did you watch that thing? I actually watched that thing. I thought I had it pretty figured out actually, but most people didn't have a clue, and most experts didn't have a clue. I probably didn't have a clue either. I think I had a clue. But like, do you think we're going to see something like that? Like, wasn't there kind of like a push to grab some land before things change and get those applications in before the OMB kind of disappeared?
You're absolutely right. The exact same thing happened, and not as a big way, because a lot of people don't want to go to LPAT. They don't want to fight because it typically means, well, it used to typically mean about a year of extra time and about $500,000 of extra cost. Now we're finding that it could mean as much as like 3 years. Like, they're booking out LPAT hearings right now. What I've heard is 16 months out.
Yeah.
I'll give you a really good example because it's finished done. I can talk about it now. We sold a site on Jarvis to Center Court, just south of Gerrard. And Center Court bought this site basically thinking that this is probably a 20-story site at best. We believe there is a planning technicality to make it a high-rise site. We believe that, they've dictated this in the official plan as a high-rise site. So they went forward with that basis. They had a very complex LPAT hearing. They hired,
Isn't a park there the problem? Like shadowing that park?
That's right, Allen Gardens. So they they hired, planning scientists plant scientists, and to look at, the shadowing in December. It was a very minimal, and they were able to look at this very complex planning and actual external argument to, on the basis that we believe this could be a high-rise site. So, but that just got approved at the start of this year, I think, because they gave them a partial approval and then they went back and got another approval. And we sold that site. It closed in 2017. Yeah, so they just got the approval. And Center Court is very quick with their construction. So they've gone under construction this month, and they did their sales. I think they started in April, I believe, around $1,450 a foot, I think. But
yeah, they sold out like in 2 seconds.
Yeah. And so that's an example of what you have to expect now. The LPAT takes forever. So no one wants to go to the LPAT.
Yeah.
So back to your point is that when that change happened from OMB to the LPAT, there was a lot of people that thought, we're just going to buy these sites based on good planning today and based on what we believe we can do today, which is how a lot of it happened. But now with inclusionary zoning, if you're within an area where it's going to be directed on this inclusionary zoning, there's really no arguing around it. You're going to have affordable housing, and that affordable housing will have to stay affordable for 99 years. It's not like the old rules of affordable, where, say, if you had over 6 rental units and you wanted to do a development, those 6 units would have to be replaced, and they could be replaced for roughly about 20 years. They had to be affordable. If the original person moved out after 10 years, you could go back to market rates after 10 years. So it wasn't as horrible on the economics of the deal, and the banks financing these developments were okay with, working through more favorable terms. But now with this is affordable for 99 years. There's no getting out of it. So it's a drag on the pro forma. Typically will cost the developer a little bit of money to build these affordable units. So again, they have to make up for it. It's just arithmetic.
So you were mentioning about industrial though. So the industrial market from 2007 to 2015 went through those changes, and all these landowners, it wasn't enough to, there was no motivation for them to sell, right? Do you think inclusionary zoning, these changes, is this going to really motivate the old school landlords to want to sell any sooner? Or this is just like a, hey, whatever, I'll let you know when I'm ready?
Any sooner, yes. I mean, as I mentioned, we're up 72% in Q1. Now we're roughly in the 60s. Q2, the market is, taking on massive amounts of volume because everyone's thinking, well, condos are still selling, the velocity is still good, so developers still need to build because there's still a lot of people moving in. Canada has forecasted the highest amount of immigration possible in the next 4 years once they open up the borders. And so developers still need to buy land to build buildings. I mean, effectively, developers are in a service industry. All they're doing is providing a service of housing for people. And so is that changing right now? Yeah, the volume is up massively. But, similar to what happened on the industrial market, when the global financial crisis happened, there was a massive degradation of really, I guess, kind of faith in consumer companies and really companies all over the place. So everyone thought the world was ending at the time in 2007. So the market stopped in 2008, 2009. And the industrial land market, which is very dependent on business and, consumer businesses and distribution, base companies, warehousing. So at the time, there's a bull market before in 2007, before the crash happened, when things kind of slowed down, because it generally the real estate market is 12 to 18 months slower than, say, kind of the stock market. You saw this kind of slowdown, and all the landowners that were at one point getting, at the time, I think it was 600,000 to 800,000 an acre, and all the buyers, the developers, the pension funds who buy the sorts of industrial real estate said, we're not really willing to pay that per acre because the tenants are not willing to pay the rates that we want. And so you had this weird cat and mouse game for years until really 2016, 2017, where the rates were not enough to justify the land value. And the rates in Toronto for industrial real estate stayed so stagnant for so long. It's so typical Canadian. Everyone's so conservative. And then 2018, people started pushing their rates and realizing, wait a second, there's no product in the market, we can push rates. And so landlords started pushing rates in 2018, and the market has gone up like 20% year over year in industrial now. And the market is just on fire with industrial. So people can't get enough of it. The rates have gone from essentially $6 a foot in 2016 to like 12 now.
So is that mainly because of the need for logistics space, or is that a lot of people buying these warehouses and turning them into retail and, getting an extra 10, 15 bucks a foot on the rent?
No, it's all industrial based. So warehousing, distributions, logistics, 3PL, companies who need to take space. To your point, it's been the opposite. Brick and mortar retail has obviously taken a massive hit. People are buying online. We've had more growth in e-commerce in the pandemic than we did in the previous, I think, 5 or 7 years. Wow. So you have this growth of like 25% of online sales happening. Where is all that growth have to be supported by? It has to be supported by industrial real estate. So industrial real estate is the backbone of online sales. Not only that, Toronto has a very, conservative way of allowing industrial land to be built. So again, it's very similar to the residential market. There wasn't enough land. And so all of a sudden people started pushing rates. All of a sudden, in typical conservative Canadian developer fashion, oh, they're doing it, we can do it. So everyone starts pushing rates and becomes this snowball effect. And in 2019, it just took off. 2020, it was muted for a second, and then it's kept going this year. And it's been probably the hottest market, not only here in Toronto and the GTA as the third largest industrial market in North America, but across the world. You see, massive private equity groups like Blackstone gobbling up monster portfolios. Everything is priced to perfection, sub 4 cap rates, sub 3 cap rates, going in yields, because the rates are moving so quickly. So what happened in residential land is now happening in industrial land.
Yeah, I've heard business owners talk about that. Their landlords are basically doubling their rents. One guy, 30 years he's been there, and his landlord's
Wow.
like, at the end of the year, the rent is double. And so he's like, okay, it's time to retire. He's moving on. And I
Yeah.
know I have a family member who sold an industrial building, crazy amount of money, right? Again, a business forced into retirement because of COVID. And that market, yeah, you never
Are
really
we
hear that, right? The industrial market's booming, right? Not in my lifespan. And it's like not 2007. I wasn't really paying attention to that stuff, but definitely hot
are
market.
we seeing more height or multiple stories in new warehouses that are being built these days? Or are they still just gigantic one-story sprawled out Mississauga style buildings?
Well, I mean, they are still what you assuming so with Mississauga. And of course, you probably know the word Orlando Corp being the largest industrial owner of real estate in that area. But yes, they are starting to look at multi-tiers. I actually don't sell industrial real estate. We have a very good industrial team. And so I specifically haven't seen a multi-stage industrial, but I believe the first one is happening in Vancouver. This is very common in Japan where they don't have very much land. I know industrial has been multi-story there for a while, but at this point, I don't think the economics make sense yet to
Really?
do multi-storied industrial, but I'm sure it's in the cards in the future.
Have you guys seen the Amazon, like the new Amazon distribution centers and all that kind of stuff? Like those things, just the one in
Crazy.
Ajax, it's like so crazy looking at it.
The
It's
robots inside are insane. Have you seen inside these things?
I've only seen a little bit online, right? But
It's
it's
nuts.
yeah,
Just nuts.
massive space.
So I'm gonna shift the conversation for a sec because there was big
Uh-oh.
news that came out this week in real estate, especially kind of on our end of things. Do you know what I'm gonna bring up?
I think so, yeah.
Jewish family.
Yes.
Yeah. So the Libfelds, the conservatory group, are selling off the entire business. What's going on from? What have you heard about that? Like, does Colliers get some of that land to sell, some of those deals? What happens?
Well, I can't really comment on it right now,
Oh,
but it looks like from the Toronto Star article that, the conservatory group, that they have some family members who want to go their separate ways or maybe have some
yeah,
disagreements. They have built up a massive portfolio of land.
massive.
And so I think it's going to be, what we usually call these are divorce of a partnership, really, but this is a family-based partnership. So we've done a number of these over the years. And I think that, these may continue to happen because unfortunately you have families that have grown in size. They have multiple kids and cousins and, they all keep these family businesses in check. But when the portfolio gets so large, I'm sure that there starts to be, differing views on, you can go one way or another way. And I know, there was another high profile developer family a few years ago had the same thing in the news. And I really think that it's because over the last 30 years, if you've been, a fairly substantial development or investment based private family, over the last 30 years, you've made massive amounts of wealth and you've probably expanded in large ways your portfolio. So if there was not infrastructure in place and rules in place, then, maybe there are next generations that are just looking to do something different. So I think that you know, it might happen more and more. Hopefully it doesn't happen in the public eye. But, you know, we've been in a 20-year bull market, really. And you can call it a 30-year run. But maybe not quite 30 years. I think 94, 95 is when the market started coming back. But since 2000, the market's been fairly consistent. A few psychological dips, but a few slowdowns. But when you think about it, Toronto's been very consistent. And that's why people have been calling for a crash for many years, because it doesn't seem sustainable.
The fundamentals are never the problem in Toronto, right? It's always some outside thing that destroys whatever's going on here for a little bit.
Yeah,
It's
we don't pay
nothing.
attention to fundamentals.
Well, but the fundamentals here are always so ridiculously strong because we're so far behind on everything that, like, it's never the fundamentals. It's, you know, Wall Street decides to, you know, lever up the entire nation, you know, 98%, right? Even maybe more. It was probably more like there's a lot of blind shorts going on with the real estate market. It's probably oversold 140% over there, right? So, like, you know, and now it's a pandemic. I mean, has nothing to do with the fundamentals of the market here, right? I mean, obviously those are impacts on fundamentals, but it's not the actual market. You can't kill this thing. They keep trying, and then it just keeps running away.
Darryl, it's a very good point. I always personally like to say the analogy that we have this golden hen that's being fed golden feed. And the golden hen is immigration, and the golden feed is low interest rates. And when you have those two aspects of the market staying consistent, low interest rates and immigration coming in, and then you really have a constrained geographical area in which you can build, not much is going to change, I don't think, until those people stop moving. And when you look at the historical events of, say, a Manhattan, you know, that grew at incredible periods since really, I believe it was 1908. I was looking at some data earlier, and Manhattan grew at roughly 72,000 people per year until the 70s. So if you have kind of the similar veil and thought that Toronto is going to go through, and when you look at Toronto, it's actually quite similar to the geographical area of the New York tri-state area, not Manhattan per se. Well, you start to think that this may continue to move on. The one difference I would say is that Canadians are so conservative, you'll get these blow-ups, these extreme hottening of the market, and everyone holds back because everyone starts to think, oh, things could be overheated. You know, a prime example is 2013. I remember one of the largest developers in the city was talking to me and telling me that we're not going to buy land over $60 a buildable square foot. That includes downtown land. And they had bought a very large site, one of the largest at the time, downtown Toronto, at roughly, I think it was $65 a foot. And they made this proclamation, obviously being quite wrong. But from 2013, late 2013, after the launch of, it was Center Court and Lifetime's development on Temperance, which they sold quite well at the time, which you'll laugh was around $650 a foot. Wow. They, you know, the market kind of dampened a little bit. Buyers.
What did they pay for the land?
Well, they paid, I think it was $45 a foot or so.
Buildable. $45 for the land, and they sold for $650.
I think so. I'd have to go back and look at my notes. It's been a while. Wow. But yeah, it was the market.
Yeah, those were the metrics back then. But the construction costs instead of $350 were like $150.
Yeah, around $170. Yeah, so that from that time period in January 2013 or so, when they finished that launch, there was a few other launches. They didn't go that well because all the buyers thought something's going wrong here, because they were scared from, you know, the global financial crisis not that long ago. So then the market stayed fairly neutral. I believe the appreciation was around 2 to 4%, very slow. And then the end of 2015 happened. There was a few very good launches. Myself, I remember buying something at $700 a foot and thinking it seems a little overpriced, but I like the area. And then you had 2016, and then the market took off. And then you had 2017 as the highest point in the market, 36,000 condos sold that year. And the market continued to go. So you have these points in times where it seems the Canadian conservative comes into play thinking, oh, wait a second, are we overbuying? We need to be careful. So the market almost recorrects itself, takes a little break, takes a breather, and seems to continue going. But again, that golden goose and the golden feed, if that doesn't change, I don't see the market changing drastically.
I think during that time period, though, that you're describing, it wasn't even so much that they had looked around and gone, holy crap, this is crazy. Let's slow down a bit. First, they went, you know what? We can't afford houses right now. Let's go bananas into condos, right? And then everything shifted into condos, and then the housing market kind of slowed down. Like new housing went to shit completely, right? I don't know what the resale market did, but it was probably slower if I remember correctly. And then what happened after is everybody went crazy with condos, and then they all looked around and said, hold on a sec. The housing market, the prices are lower down there now. Let's all go crazy back down into single family houses and townhouses, right? And then and now everybody's just kind of crazy about everything. And it feels like in the last week or two, everybody just looked around and said, where do we put our money right now? Let's go shopping. Let's go for dinner and spend crazy amounts of money on dinner, like as much as we can, because maybe they're going to lock us down again soon.
One thing that's being talked about a lot right now is like material costs are going down, right? Like things are starting to settle down. There's a little bit of a light at the end of the tunnel that all these construction costs may not end up staying as high as they've been over the last year. Is that something that builders and developers are noticing? Are they forecasting it's going to go lower? Are they factoring in any extra costs? Like what are they going to do in order to be able to build and understand what that cost is going to be 3-5 years down the road? What's that perspective?
Yeah,
a lot of them did what Jeremiah is talking about in the market with purchase prices. That a lot of them just said, we're not fucking paying this. We're going to wait. Right. And allow supply to come up.
Maybe confidence is coming back in getting things built at better prices.
The general consensus I'm hearing is that hard costs are going to come down, and there will be a bit of a softening in the market, especially the lumber market. What I had heard is that there was a number of employees that weren't actually working in the mill yards and the wood industry, or lumber industry rather. So they had a shortage of labor, and it was difficult to actually get the product out.
What about even concrete though? Like even things that are not like like the typical commodities and stuff like that. Like everything has just been through the roof, right? I can only imagine how much a developer pays in concrete to build a condo building, right? Like
steel has always been a difficult one, but the forming contracts have been fairly consistently moving upwards over the years. I don't think that's going to change drastically. I think that there will just be a bit of a neutralizing in the market from what I've been hearing from clients. The bigger thing though to note is that in Toronto specifically, next year, May 1st, 2022, Toronto Green Standards version 4, that will add on roughly 10% cost. 3 to 10%, depending on the size of your building and the type of build out, onto your hard costs. So there is going to be a reverse push there. We don't see hard costs changing drastically in the next really 12 months.
What's caused the most amount of failed condo projects? Like we've seen a few, we've been talking about a few. There's been some condo projects that either pre-sold a little bit or none at all, and they've all been maybe coming up for sale, or there's been cancellations. Is it just construction costs, or is there other things going on?
mostly construction costs and planning delays. Have been
Selling too early, launching too early.
Yeah,
People used to launch so that they could get their funding quicker, right? And lock in that rate, right? And get going and just spin the money quicker. But it turned out that that was a bad idea, right? It's only a bad idea when costs are escalating the way that they've been escalating, right? That wasn't normal.
Sale
5 years.
prices has to outpace costs. That's what it is, right?
Timing,
If
though,
you're doing the
like,
planning, as long as the condo price that you're selling for keeps going up, you're kind of like, okay, this is going to work out. But
the price of money was going down, the cost of materials was going up, and if you had fixed your sale price too early,
Mhm.
your margin disappeared like drastically, right?
Yeah.
Or the
Exactly
guy
right.
who you had a
you pull the
contract
plug. You just
went
say,
bankrupt. Yeah.
yeah.
Where you
This
pull
was
the
a very common theme, say, kind of pre-2017. It kind of got phased out because of a number of these cancellations. So developers have smartened up. Lenders who are doing the construction loans have smartened up. Mostly, I'm trying to think of even one project. Not many developers are now selling before they have their finalized zoning. And once they are selling, it's, when they have finalized zoning so they can prepare to go to construction financing.
That's what I always thought. I always thought you'd have to you should have your zoning, like you should have things in place. But I've heard of, and this is not my area of expertise, but yeah, I've heard of a lot of sites that they're selling before they have zoning, and that's concerning. If I was a buyer buying a condo, I wouldn't touch that.
Yeah, and
Pre-construction.
it's changed fairly drastically, and now you'll see new condo marketing, banners as fully approved, ready to go to construction. This is part of the marketing. Buyers are becoming more sophisticated. Again, as our market is maturing, everyone forgets that, pre-2005, condos were really not the norm. And as Darryl mentioned, the condo market really started to take off in 2013, 2012. Even though it had been there for a while as a true form of housing, it took some time for the market to recognize that this is something that can actually be very viable to live in. I don't have to live in a house with a yard, because traditionally you had, in order to meet the need of the immigration coming into the city of Toronto, you needed about 40,000 housing units, and that would be split by low-rise housing, so what we call ground-related housing, like houses, townhouses, stacked townhouses, single-family homes, semis, and high-rise based product, which is really, call it 6 stories, 8 stories and above, anything that is a multi-story product. And in 2017, that shift of 40,000 units went from the highest it's ever been for condos at roughly, I think it was roughly 36,000 condos sold, and the lowest it's ever been since, I think, the 70s for low-rise housing at 7,000 units sold. So as Darryl mentioned, it was very true. At that point in time, there's a very negative viewpoint of single-family ground-related housing. People thought the market had gone way too hot, it was way too expensive, and everyone was rushing in to get condos. Obviously, that market almost reversed. You saw in 2020, all of a sudden people realized, I want to be in ground-related housing. So that market changed, the psychology changed, and condos actually took a little bit of a hit until June of 2020, when there was a few very good launches on Eastern, on Queensway, another one up in Thornhill.
the one you were talking about before.
Yeah, exactly. So things kind of changed a little bit, and people are still a little uneasy on the condo prices. I think that they're careful, but the data has shown the market is still very much there. As far as the ground related stuff, what I'm hearing, for example, I think Minto launched 2,000 units. They had, I want to say it was like 10 times the amount of registrants as the number of homes they had.
Yeah, for sure.
It was almost insane.
It's
When you
insane.
think about it.
You know what? I keep thinking to myself, like the marketing agents for condos are so brilliant, especially here in Toronto. they really like, you never talk about a house as a price per square foot. We need to stop talking about condos as a price per square foot when you're buying it. It just has to be the price, right? Because cost per square foot is baloney. I can show you a much better 595 square foot unit than something that's 675 square feet, more functional, better layout, like better to live in. You know what I mean? Like the price per square foot, it's a metric, I guess, because everybody's investors that are buying, right? But like we have to get away from this thing because, I mean, if the price is right and the unit is good, that's all that really should matter. It's not like people get turned off when it's like, oh my God, now the price is $1,250 a square foot, and oh my God, it's $1,400 a square foot. They're all $599 though, right?
You're not wrong. I just think, like you said, the majority of the condo market has been investors buying condos in order to rent them out, because our rental market for developers has been the lowest, on record, which I guess I should say conversely, it's the highest it's ever been this year for actual, call it purpose-built rental buildings being built. But people look at those metrics because they're investing into it and they want to compare it to the other things in the market, the other buildings in the market. So I don't think that'll change drastically. It's just been traditionally the way the market has gone. And with a house, you have a yard, you actually have actual land. So you have to bring in place a number of different factors, which typically what we talk about is a dollar per front foot, the depth of the lot, number of bedrooms, layouts, basement built out. There's a number of things that go into it. So it's not the
resale condos though. That's how they're sold, right, Darryl? Nobody in a resale condominium is ever going to say it's this price per square foot. It's like a secondary measure to kind of just look into, to kind of go, okay, maybe because you're going there, you're looking at the unit. Do I like it? Do I not like it? That's what I'm going to pay. That's it. Very few people are going to look at price per square foot first.
I think
I would say that's the opposite though. I hear lots
on
of
resale
and resale.
It's ignorance. No, to me, it's ignorance when they go there, because it just makes them feel good. They think, oh, I'm paying this price per square foot. They're comparing it to pre-construction. But when a buyer, an end user walks into a unit and they fall in love, the last thing they're thinking about is price per square foot. They're looking at comparable sales. That when they're sold for 800, okay, I'll pay 800. That's fine. And the square footage is close. It's not going to be.
They just want to know how much more they're paying than they should. That's all we care about when we're buying stuff, right? How much more did I just pay for this than I should have? And can I justify it?
Yeah.
I haven't heard a Darryl rant in a while, so I think this is the cue right now.
Well, because I didn't buy anything with you lately.
So we're coming up. We got about 8 minutes or so left in the show. What are the trends? Where are things going in your space with everything else? So land right now you're saying is hot, but you feel like that's going to be something that's going to be changing. Developers are building still. They're still confident, but do you think there's going to be more developers looking to do purpose-built rentals, more condos in the future? Where are things going?
Yes. We've sold a number of sites for co-living builders who actually can be more competitive on a land price basis. I think that is going to be the next trend if you're talking about what's new in the market. There are many more people looking at rental than ever in my career anyways. And because the rents have continued to move, there was a bottom point in, I think it was in the fall of 2020, rather, for rents, condo rents. But, the market has continued to move up, and it's really tracked back most of the loss that was done during the pandemic. It's made up for. So I think the rental market, you'll start to see purpose-built rental happen more and more. I think the consumer is getting smarter. They're starting to realize, wait a second, I can live in a building that's professionally managed by either a pension fund or a private investor that is a rental building. I never have the risk of having to move out from some, random private investor saying that I don't, I need to sell this condo. You're probably going to have to move.
No, my niece needs the unit. My niece is going to move in.
No, they don't even say that. They say, I want to sell it. Yeah, they say I want to sell it and I want you gone in 30 days, and then
Right.
they complain when it doesn't happen. Trust me,
Oh.
landlords are so clueless.
I think I'm
Yeah.
going to move into it myself. I'm thinking I want to live in a 1-bedroom myself from my
I know
mansion.
it happened to my sister, and I told her, listen, you have rights to stay here unless they can prove. But a lot of the time on a resale condo, it
Unless they're
seems to
moving
be
in.
end users who are actually going to move into it. So they have to give them 60 days notice, right?
On a sale. Yeah.
Yeah, or 90 or 60 days. But I think the two trends are co-living is going to happen more in downtown areas.
Really?
Mid-rise walk-ups are starting to be more common. So similar to Manhattan, you have buildings being built on small little corners. We sold the corner of Niagara and Queen Street West. A 40-unit building is being built there. No parking, walk-up rental, very similar to Manhattan in a sense. This is going to be a lot more of the kind of product people want to see because these are going to be beautiful, very livable units close to good areas. Co-living is just going to be more affordable type product, still in good areas. It's almost similar to kind of student residence, but managed more professionally. It's very common in Europe.
How many people do I have to share my kitchen with?
That's a good
How much you
question.
want to pay?
I think it's roughly 2 to 4 people. It depends on kind of the product, but there is a German investor who's been building this stuff, who's been quite good at it. And yeah, it's something that's very attractive.
Yeah,
It's not the
it'll
whole
attract some people.
floor. It's not like when you're in university.
Yeah, it's not like that. No,
It's not like a
These are
big
very
mess hall in
beautifully
the middle.
professionally managed buildings. So I think they're actually going to be very good alternatives to what's out there in the market. I mean, traditionally, there's only been rooming houses in Toronto that have really been co-living other than actual residences. So I think those are the two big trends. What we're seeing is a massive shift into investment product too. We sell a lot of retail plazas, retail buildings, and office buildings. Office is taking a hit. It's really one of the asset classes next to hotel that has not been good this year. It was down 16%. Although we've sold all these boutique office buildings lately, and we believe it's a shift because tenants and users want to get out of the larger office buildings and get into their own office space where they don't have to be around people in elevators and a risk there. But retail plazas that are in good areas on pieces of land that could be used for future development, those are very, very hot right now. That market was up 43% year over year.
Were the prices up or just the like the amount of sales?
The volume was up. The price was fairly neutral.
Right. Okay.
In fact, some of the cap rates had actually gone up about 25 basis points in certain areas, but they've trended downwards again now. We just sold a Bank of Montreal site. It had 14 years remaining of term, and it was a sub-4 cap rate. So there are still aggressive pricing being sold, but I think mostly people are starting to say, well, we are looking for yield. We want something that is a cash flowing asset. And it's a whole nother market outside of, I know we talk a lot about development land and residential development land, but people are looking to find yield. And that's why the multifamily market is at all-time highs as well. But retail is actually close behind.
What kind of
There you
yields
have
are
it.
we looking for? What are we happy with right now? Sorry.
It depends where you
Talk to
are.
Jeremiah all day.
It depends where you are. It depends on I guess I'd say there's really 3 factors: the covenant of the tenant, the length of term, what we call the WALT, the weighted average lease term remaining if it's multi-tenant, and the location, what the kind of the ground related value of the land is. So if you look at those different yields, they come together to make this really equation of what is valuable. But to give you a good example, in downtown real estate, if you have urban real estate on good areas with a AAA covenant, something that is a multinational tenant, that is essential, that would potentially be open during the lockdown. So say it's Shoppers Drug Mart, Rexall, LCBO, bank are still considered good, but they're a little more careful. because the banks have been closing some of their branches. But these type of things will be anywhere from a 3.5% cap rate to a 4.25% cap rate. So pretty aggressive yields considering where they are. And then you have retail plazas out in the suburbs. If they have good covenants as well, you'll see everything from around a 4 to 5% yield. And if you're looking at street front retail, it's kind of a bit of a different beast. That market has been very low liquidity. That's probably the hardest hit, especially in the urban areas. People are not sure what's happening there yet. We're seeing, I guess, roughly 4 to 5% cap rates, depending on the area. But people are searching for yield. They want income coming in, and they're looking for it in different forms of assets. And we have a number of smart investors who are actually investing in office real estate because they believe if you have lower forms of like 1 to 2 walk-ups or 4 stories or 6 stories type office buildings where they're not massive towers, anything under 100,000 feet, you still have some certain investors taking a position there because they can get yields as high as 6.5% rate in some areas. So we've sold a number of office buildings in the last little while. We actually sold a 50,000 square foot office building in downtown Mississauga in the middle of the pandemic. And a private investor said, I'm going to be here for 15 years. I like this location. I like the building. I can manage it better. I can get some more efficiencies out of the income. And I'm buying it at just sub 6% cap rate. And I'll be able to push that to a 6 yield. And so on a levered basis, that's going to be close to a 20% levered IRR. So it depends on where you are, but we think boutique office, sub 100,000 square foot office is kind of the quiet, in the shadows, contrarian investment play right now because the yields are good. And if you look at tenancies like engineers, teachers unions, community-based groups, there are still a number of tenants that will always continue to use office. And I think that is what I would call the contrarian play right now, is to get in and find good location office with yield.
Beauty.
Insider tip. Love it.
Love it.
Thank
Jeremiah, you are by far an
Jeremiah.
expert. I know that a lot of the listeners appreciate all the things you said. There's a lot of, like, you talk about stuff at a really high level, you can tell
We're
that
going
there's
to
a
have
lot
to
of stuff there.
translate some.
Yes, right. So you're really good, but we appreciate. I'm hoping that you can be a regular guest on the show, and maybe you can give like a little shameless plug. Like, where can people follow you?
Or a
and find
Shamess
out?
plug.
Oh, there you go. Play on words.
I know they think I'm Irish and my last name is actually Middle Eastern.
I thought you were
Where can people find you?
Amish. Jeremiah Shamess.
Thank you so much for that, Darryl. People can find me on Twitter at JShamess, on Instagram at JShamess. We post some interesting things there, on the website, collierscanada.com, LinkedIn, Jeremiah Shamess. And then I put my email here at the bottom as well. If anyone wants to get a hold of me, very easy to get a hold of, and someone on my team or myself will get back to you as quickly as possible. But we represent owners, we sell buildings, we sell land, and we advise them on what to do, whether it's to sell or hold or how to position their real estate. Ultimately, Darryl knows this, we want to maximize the value of your commercial real estate. And that's really what we're looking to do. So I do appreciate the time today to talk about the market. I love talking about the market. It's what I do all day long, and I love studying the market. And I think you would both say that the Toronto real estate market is one of the most interesting ones in the world. Oh, and I think we'll continue to sit in awe and be maybe confused at times, maybe interested at times, but ultimately students of the market.
Absolutely.
You could have a whole podcast about it.
You could.
Yeah.
Awesome. Thanks, man.
Thanks a lot, Jeremiah.
Thank you.